Want to know which indicator to use? Stick around. Welcome to Trading Without Fear. So I'm not a financial advisor. Trading is risky. I encourage you to do your own research and understand the risk of trading before you enter into a new trade. So I've seen a lot of people on YouTube, especially a lot of new traders, maybe with a year and a half worth of trading experience, and they're posting these things like, I wouldn't have found the XYZ stock if it wasn't for this indicator. I made tons of money off of this indicator. And they're kind of giving these links to go and buy these indicators. So we as technical traders use analysis of the markets to find up and down ticks. These up and down ticks form patterns that we've learned to identify and recognize as specific edges in the market. Now what I identify as an edge is a higher probability of one thing happening over another. The up and down ticks are the collective minds of every participant within the market. The patterns that we've learned to recognize are self-fulfilling prophecy. They provide us the higher odds of being able to take money from the markets, but only if we're prepared to do so. Myself, I've used and bought several indicators in my past. There are literally heaps of indicators out there, and there's many ways to interpret what they each mean. So you may have heard the saying that only price pays, and the reason behind that is so many people use indicators, and it's in my belief that a lot of them haven't learned to trust themselves, which is why they rely on these indicators to do so, to tell them what to buy and when to sell. So trading is a pattern recognition numbers probability game. There's no indicator that exists that can predict what another person is going to do in the market, and all it does is take one person within the market to either cause it to go up or cause it to go down. The indicator can't determine what a person who hasn't entered into the market, what position size they're going to be doing, if they're going to be going long or short. All traders that's been learning for about 6 months or longer, they should already by now learn how to identify a trend. So in case you're wondering what indicators I use, the only indicators I use is volume and VWAP. There's no magic bullet to be trading in the market, and there's no stock trading secret. There's no indicator that's going to actually, make trading a lot easier for you. A lot of people think that having indicators is going to make them a lot more money a lot more quickly, and they think it's some sort of stock trading secret that all these rich millionaires, billionaires use. So one of the biggest secrets within consistently profitable traders when it comes down to indicators is they either use very little to none at all. Myself, when I first started trading for the first about year and a half, I had up to 15 different indicators on my screen, everything from unusual volume indicators, MACD indicators, RSI, slow stochastics, all different types of indicators, volume, VWAP, everything. One of the things that I learned over time was that there was no shortcuts to trading, there's no secret sauce, there's only hard work, dedication, and education. Because the patterns are the collective minds of the markets, there's an infinite number of ways that an individual trader can interpret the up and down ticks and react based off the interpretation. What we have here is a little bit of a small uptrend and a pullback, then another uptrend and a pullback. Now it depends on what type of trader you are, and depends on what type of information you've learned to trade. This uptick right here and down, this could be a high or low. At the same time, this could be a low or high. So it depends on the information and the way that you're actually looking at the markets. There's an infinite number of ways. You could actually take a short position here, add to your short position here, add to your short position here, risking off to this level. Or you can also interpret it on the long side, thinking this is a higher low, a higher low. I'm going to enter into it here, risking off this level. And this chart right here is a pretty clean looking at ABCD pattern. So it depends on how the information is done. There's various different ways to even trade a very simplified chart like this. So think about it like this. If the circle represents all the possible trading methodologies, and the average trader only knows about 1%, 1 to 2%, which is represented right here by this little dot, that means that the rest is invisible to them. And what that means is no matter what the indicators you use, the market information, because you haven't learned about it yet, is still invisible. What that means is even with an indicator, all the information that the market is making available is still invisible, because what you're relying on is the indicator to tell you what to buy or what to sell. The indicators use past data to actually print the lines on the chart. And so in order for it to actually determine what's going to happen next in the market, what the other traders are going to be doing, it'd have to actually be able to go into the future and identify what each individual trader is going to do, how they're going to move the market, and what size they're going to come into. So if you think about it like this, the first time you actually saw a stock trading chart, what did you actually see? You probably didn't really see much of anything. You probably saw some a line, maybe a couple of bars. Maybe you could actually see a little bit of a trend. But now, if you think about it with your little more experience, what do you see now? What you may be seeing now over experience and time is trends that formulate and present opportunities to enrich ourselves. So instead of actually learning about a new indicator that you're hoping can actually give you an edge in the market, which it most likely won't be doing, is learning a little bit more about technical analysis. Familiarize yourself with patterns that work. Go to chat rooms, go to people that actually teach proper ways of trading, and become really good at one setup. Now, over time, when you're starting to learn one setup, what I mean by one setup is one specific pattern, and you become really, really good at that, other opportunities start to slowly unravel themselves to you in the market. Tom Brady didn't become one of the best football players by only going to the gym an hour a day. By eating tons of donuts, watching TV, playing Xbox. What he did is he ended up going to the gym for several hours a day. He ended up watching hours and hours of tape and watching games after games and identifying how he was actually playing and analyzing his body movements and analyzing how he was reacting in different situations and strategies on the field. And the best part is he loved every single moment of it. As a stock trader, if you don't love what you're doing, you're end up going to find ways to either take shortcuts, and you're not going to be able to perform efficiently as a trader. If you like this content, subscribe to the channel, give me a big thumbs up, leave a comment. Just remember one thing, that good planning and hard work leads to prosperity, but hasty shortcuts leads to poverty. And that's pretty much it, and we'll see you next time.